Once again, I'm here to bring you the latest news and trends in the Calgary real estate market for September 2021. I'd like to start by giving you some context through a few articles I've been reading recently that you'll find very interesting. Calgary is among one of the most affordable markets in Canada for millennials. More millennials in the 30 to 39 age group are carrying mortgages in Calgary compared to the national average, making it one of the most millennial-friendly housing markets in Canada. There is a high degree of affordability in Alberta market, which translates into relatively high rates of millennial home ownership. When compared to Vancouver and Toronto, which had the lowest figure of 30 to 39-year-olds who held mortgages at only 24%. Calgary was the most affordable for Gen Xers, that's age 40 to 49, with 54% holding a mortgage. Since affordability is a crucial driver in home ownership, you can see why it's so attractive to one of Canada's youngest city populations. The second article is talking about the Canadian housing market and it facing a lower risk of overheating by RBC. The frantic pace of sales is starting to slow down across the country after reaching sky-high levels at the start of the year. The Canadian housing market has slowed since spring. Calgary continues to be the most affordable of the markets of the big four cities. And according to this report, the market has recovered solidly, and in the past year, existing and newly built homes inventories are no longer excessive and prices are rising moderately. A startling $10 billion turnaround in Alberta's deficit, and the economy is growing more rapidly than expected, which is forecasted to expand about 6.7%. Overall, employment is anticipated to increase by 5.2%, while the jobless rate is falling faster than expected. Currently, housing starts are surging, and with higher oil prices, an 8% bump in oil sands production, along with stronger natural gas markets, the total non-renewable resource revenues are projected to hit almost $10 billion this fiscal year. That easily eclipses the subpar performance of $2.9 billion forecast in February's budget, and it marks the highest natural resource payday in Alberta's history within the last 10 years. And higher commodity prices and a stronger than expected economic recovery are driving the province's improving financial fortunes. Several other bright spots have emerged, such as rising consumer spending, higher non-energy investment levels, and increased manufacturing shipments. Yet the recovery still has a ways to go, as Alberta isn't back to pre-pandemic employment levels, and some sectors such as tourism and hospitality face profound challenges. Higher oil prices and expected GDP growth are welcome changes after last year's deep recession. Now that I've caught you up on the current events, let's get into answering the age-old question of how's the real estate market doing? Remember, we do these market updates once a month and as quickly as possible for you so that you can understand how it's going to affect you. So make sure you subscribe for that. We also come out with more real estate tips, home tours, community tours, and highlights. And if you like that sort of content, you can go ahead and follow us and be sure to turn notifications on. Don't be shy to ask us any questions about the current market or the current situation you're in, and we'd be more than happy to help. If you want more direct access to us, email us here and one of our team will get back to you soon. All right, let's talk about sales volume. Sales in August was a total of 2,151 homes, and that's 37% higher than the same time last year, which is also 25% higher than long-term trends. Sales have slowed down from the record-setting pace from earlier in the year, but on a year-to-date basis, the 8-month total of 19,516 sales is higher than annual sales recorded over the past 6 years. Sales have far exceeded expectations throughout the most of the pandemic, driven mostly by demand for detached homes. Sales in the detached market totaled 1,300 units, which was 31% higher than the same time last year. Taking a look at this table, you can tell that sales in virtually every price bracket is being outperformed this year versus August 2020. And the bulk of the sales are happening under the $600,000 mark. Inventory. At At the start of August, we had 6,680 homes on the market, and when we finished the month, it was reduced to 6,053. That is a significant decline in inventory, and currently we have 7% less inventory than we did last year. And looking at new listings, we listed 10% more homes than the same time last year, which is a total of 2,800 in August. Despite that, we still saw a steep decrease of 600 homes due to the continued pace of sales, and we also need to factor seasonality with some homeowners that aren't triggering sales on their homes, taking their homes off the market. Each property type did perform differently, with detached homes seeing a 14% less inventory, semi-detached had 10% less, row townhomes reported a 5% decrease, and apartments saw the only increase in inventory of 7%. And let's roll right into pricing. Here's the breakdown for each property type. Detached saw a 10.6% increase in price, semi-detached homes at 9.9%, row townhomes had an 8% gain, and apartments saw a modest uptick of 2.3%. Check out this graph, which shows how each district in the city performed. They all saw consistent adjustments upwards, with the lowest performing district being city center, and this is largely due to the higher concentration of apartments. If you're a buyer, you might be asking, what kind of deal can I expect? This is a hard question to answer because each property type, district, community are all performing slightly differently. If we were to take a look at overall sales price to list price ratio, across the board we saw that buyers were closing about 97.8% to list price, which is pretty consistent with last month. Here's what's interesting in the detached market. August prices remain relatively stable compared to July, and that's 10% higher than the same time last year. Price gains were depending on the location of the properties, and prices are trending down in the city center, northwest, and south districts compared to last month. In summary, we can really take a look at two statistics to help us wrap up. First one is sales to new listing ratio, and this stat helps us to understand the pace of sales versus the new listings hitting the market. If the ratio is 1-to-1 or 100%, that means we're selling as much as we're listing. And across all property types, this ratio was 76%. So for every 4 new listings, 3 of the homes were being sold. What's even more important about this stat is how it is performing year over year. With detached, we saw a 15% increase in this ratio. Semi-detached has 7% gain in this ratio. Row townhomes reported a significant increase of 23%, and the apartment sector saw a nice 13% increase as well. The second stat that we can look at is the months of supply. This helps us to determine what type of market we are in. At this month's sales price, how many months would it take to sell all the active inventory? So for detached homes, we're slightly in the seller's market at 2.13 months. Semi-detached is approximately 3 months, which puts us at a balanced market. Row townhomes is at 2.8 months, which is also in a balanced market, and apartments remain in the buyer's market at 5.38 months. Interesting enough, if we look at the detached market for months of supply, it's just above 2 months in August, which is well below traditional levels for this time of year. This indicates that the detached market is not as tight as levels earlier in the year. Well, that wraps up another Calgary real estate market update. Thanks for joining me, and if you're a buyer, seller, or investor who needs a little bit more guidance and a little bit more advice on your specific situation, please feel free to reach out to us in the comment section below or drop us an email at hello@liveinnercity.com. As always, it's our pleasure to bring you this every single month, which is why we really value your continued support. So keep those likes, shares, and subs coming. My name is Jasben Lai with the Live Inner City Real Estate Team, where we help you keep real estate simple. We'll see you next time.